Today's topic is about real and fake things in the stock market. There's a saying I like to share with you. It goes like this: we don't see things as they are, we see things as we are. So basically it means that we see what we want to see and we think what we want to think. That means we have a lot of personal and subjective influence in what we see and think. One example is ghosts or extraterrestrials. Are they real or fake? Well, if you believe in it, then they are real. If you don't believe it, they are fake. Regarding the stock market, we have to distinguish what is real and fake. The real things are the fundamentals. We'll talk about the fundamentals later. What are the fake things? The fake things are most of the things we see, all the misguided information out there. Let's take a look at one real thing. Of course, everybody understands the price of the stock market is real. The price of the stock that you pay or you sell is real because it either benefits you or hurts you. When something hurts you, it must be real. When you buy low and sell high, it's always real because this is the only way to make money. You cannot do it otherwise. Now, these are the two things I want to emphasize. When the price is low enough, the bull always comes. You cannot avoid the bull coming when the price is low enough. But how low is low? We don't know. And when will it come? We don't know. Conversely, when the price is too high, the bear will strike suddenly. How high? We don't know. When will that happen? We don't know. Let me give you two examples. Last year, we have the March low for the three major indexes, and we have the December high for the three major indexes. You can see the big difference and the big percentage gains. Now, if we go back after the fact and we ask, are these low? Yes, because we see them after the fact. But in March or in February, when we ask this question, are they low enough? Nobody can tell. So that's what I mean. When we see it, it's real. When you don't see it, it's just guessing. Now, let me give you another example, which is the January correction. It started around mid-January and lasted for about 3 weeks. For the three indexes, you can see the differences and the percentage loss. Just now I told you that price is real, but on the other hand, price is also fake, because in the stock market, the price is not based on supply and demand. Although everybody says so, it is not really based on supply and demand, because there's an auction system going on there. The price of the stock that you buy or sell is determined by auction to the highest bidder. So this is not the same as you go out to buy a loaf of bread, a pair of shoes, or a cell phone. It's completely different, because in those markets, you don't auction the products. You just go and buy it based on supply and demand. That determines the price. Why the stock market is like this? Because the stock market is dominated by big players. I've talked about big players many times already. Who are they? The big players are just the people who have a lot of money to buy and a lot of stocks to sell. So they can buy and dump stocks as they wish, whenever they wish. It's tough because we cannot read their minds. We don't know what they want to do. We don't know what they think. We don't know what they plan. So this remains the greatest myth of the stock market. And another factor is that the market runs on emotions and steroids. Sometimes it goes crazy. and these are the fake things. It's real, but it's fake. It makes the price fake. And also there are all kinds of news out there. Most of them are fake. What are the purpose? The purpose of the news out there is to drive the herds. The herds are those people who don't know much. Millions of them out there, but they like to follow. So the news are good for them to follow, to direct them to buy or sell by the big guys. And the news can also be invented by the analysts as they put forward their analysis and predictions every now and then. But remember, the analysts are not independent. They are not self-employed. They are employed by the big banks or the big trading houses, which are owned by the big players. What is real? The big picture, of course, is real. What is the big picture? We'll come to that. However, we know that the big picture is always blurred because we don't see the big picture very clearly due to all kinds of information there. When the big picture becomes blurred, we have this word uncertainties. And uncertainties means that we don't see much of the big picture. And uncertainties is real because it always causes the price to come down. Now, if you want to know about the big picture, you have to ask some very simple and general questions. If you can answer them, chances are you have some idea of the big picture. Are we still in a recession or are we getting out of it? So this is a good question to ask. Characteristics of different industries. Do you know how the different industries operate? They have their own characteristics. You don't have to know much. All you need is to be able to tell some differences. What is the state of the consumer demand? Is it low or high, or is it getting better or worse? What are the market trends and the product trends? These are the things that are hard to see, but you have to get used to them. Always remember the saying, high tide raises all boats. Whenever people feel good, the stock market is going crazy, all the stocks will rise, even the garbage stocks. Even those stocks that you buy by mistakes, they will rise for a little while. And then you also have to pay attention to the reverse. When it is low tide, all stocks will fall, including the good ones. Now, the big picture changes gradually because these are the big things. They cannot change very fast, and they are predictable unless being disturbed by wars or natural disasters. In the end, you always have to ask, how good is your subjective opinion, your subjective judgment when you see things? Because we only see things that we want to see. And you have to recognize that every one of us is living in our own bubble. You too, me too. So we tend to see fake things. So how to avoid this kind of problem? If we have a more open mind, then we're able to see more real things. So keep your mind open for ideas, and not just open and follow ideas. You have to use some simple reasoning, logic, to filter out the good ideas from the bad. And every day you have to tune in to the real world, because you are living in the bubble world all the time. You got to tune into the real world, get out of the bubble world when you play stocks. Use your simple reasoning and logic, and don't succumb to illusion and fantasy. There's a lot of this around when you're buying stocks.